Hello everyone, and good evening, good afternoon, wherever you are in the world. I appreciate we have a bit of a global audience here. Can you let me know you can hear me? There is a question and chat box in GoToWebinar if you're not familiar with it. If you type in there and say hello, it's a way you'll be able to communicate with me as we have a look through the markets and the things that I am interested in. I'm going to be doing four of these over the next coming 4 weeks. It's obviously number one. For those who don't know me, I've been running a live trade room since 2013. I also own one of the online prop firms as well. So I've been in the trading space for a long time. Before any of that, I traded quite a long time as well and still continue to do so. So I'm going to give you a sort of insight and look into the type of things that I look at in the markets and my sort of view and interpretation of how I trade and the sort of patterns I look for and things like that over the coming weeks. I will be developing this series. We'll just be looking at charts this week, but next week, for example, we'll have a look at some recorded trades. So I 10-minute video record all my trades as well, because looking at the charts in hindsight is a lot different from looking at the charts as we go forward. So we're going to do about 30 minutes or so, depending how many questions we get. Have a look at some charts, have a look at some analysis, and then go from there. Okay, everyone saying hi, have found visual good, excellent, excellent. Any questions or comments, please do put them in the chat box. I'll make sure I get to them at the end if I don't get to them during the session. So what do I like to trade then? Well, I like to trade a range of assets. I primarily look at the index markets. I'm a fan of the DAX, the German stock market. I do like the US markets, especially the US 30, the NASDAQ, and the S&P 500. I sometimes have a look at the FTSE, the UK stock market. For those of you in Australia, you've got the ASX 200, I believe it's 200, yeah, it is, which is relatively similar to the FTSE as well in terms of index value, the rate it moves and things like that. So the patterns that occur on the stock markets tend to sort of apply to every stock market in my experience. There's some of that I've experience of. I don't really trade the Japanese, for example, or the Chinese stock market, but the ones that I'm familiar with tend to move in relatively similar ways. I'm a very technical trader. I'm not massively interested in fundamentals because even trading on a daily time frame, I'm not a huge fan of fundamentals. I'm not saying they're not important or they don't influence the markets, but in terms of my decision making, I find that just looking at the price action is important. I don't particularly use any technical indicators. Again, not something that really interests me, because technical indicators are ultimately just a derivative of 5 data points, the open, high, low, and close of a candlestick, a bar chart, etc. So, you know, you can pretty much know what technical indicators are going. But there's no right and wrong in trading. This is just my interpretation of the markets and just what suits me, my style, my personality. Of course, you know, the only right and wrong in trading is managing risk and making consistent returns. How you achieve that is up to you. So I'm certainly not a person who says, don't do this, don't do that when it comes to analysis. Whatever works for you, works for you. So we'll just start off by having a look at the DAX, the German stock market here, and we'll start looking at some of the things that I'm interested in. I mean, clearly we've had some significant volatility recently because of the Ukrainian situation that's affecting many of the global markets here, and that's sort of the early strength we saw where we're pushing towards those all-time highs has sort of disappeared now, hasn't it? I mean, this, just to give us some context with the pandemic. Let me just grab my pen a second, or virtual pen, should I say? I always forget to open that. And we had the pandemic here, this extremely large sell-off going into 2020, and the DAX has made a significant recovery, breaking several all-time highs up until recently, where we've had the Ukrainian situation, and which has caused significant volatility, inflation, energy prices, and so on and so forth, that are also causing a cost of living squeeze across the globe as well. I'm quite interested in pulling Fibonacci retracement from large swings low to large swings high. That's generally the only way that I use fibs. I want things to be very obvious for my trading, so I'll look at this previous high here, this previous low here, and we'll have a look at these Fibonacci swings. A key level that we identified the other day and traded was down here at this 14,844, and I'll tell you the reason I like that level. In the stock markets and other markets, we often find some very significant resistance and support points. Now, the way I identify support and resistance is I like it to be obvious. You know, when I'm trying to mark up a chart, I want to see obvious resistance, obvious support, obvious resistance. I want stuff to jump out at me. Remember, we're just retail traders. We're just jumping on the back of the big boys who move the market, or the big girls, or the big people, should I say, who move the market. Not just, we're not going to move the market ourselves, trading a derivative at relatively small sizes. And there's no problem for that, because that makes we're nimble. We can turn very quickly. The fish analogy continues to work. We're not the big whale, but the whale can't turn very quickly, whereas we're the nimble fish and we can. So if we need to be out of the market, we need to change direction, we can do that very, very quickly. Big advantages in retail trading than there is over institutional trading in a lot of respects. So what I'm looking at here is this support point. Now, very common sort of price action pattern is we see this support and it will become resistance, and we see it's become resistance there. So on the way back up, we're interested in this level to find resistance again, which it did here. That's one that we looked at, that's one that we traded the other day. Price action was a little bit naughty though. It came out and did a squeeze here, and this is where you're trapping all the buyers above a level. So people are looking to sell at this level. Keep in mind, it also has a 61.8% Fibonacci retracement here. So initially, we'd have a sell zone up here. So we'd color that in red. And then we look to get short just here, which we managed to. And then we just placed our stop. Fortunately, we placed our stop a little bit higher than this. We nearly got stopped out, but this stop hunting price action here, when people talk about stop hunting, when people talk about price action that's going to take them out of moves, this is the type of thing happens here, where you get this in this volatility, you get this big wick here that ends up taking out loads and loads of stops. Then eventually all the people who want to sell the market, there's enough liquidity for them to come, and the market sells down and you get left there annoyed. You try and chase the market and make all sorts of trading errors, but sometimes this happens. I just got stopped out of the NASDAQ yesterday on a similar thing, and it does happen. So in terms of what we're looking for on the DAX, then that's obviously the past. We can't trade the past. If we could, we'd all be very, very wealthy. Let's have a look at the future. Let me just keep these charts nice and clean, which is something I'm always very keen on, is keeping my charts clean. Now, the DAX, the question is, why is the DAX sold off today? I'm not sure, to be honest. I'm not sure of a specific reason. I mean, the markets are relatively sideways at the moment. If you look at how we've entered this sideways trading range since the 16th, it doesn't surprise me that we're just sort of oscillating up and down in a sideways trading range. So I don't generally look for cause and effect when it comes to up or down days. I'm not massively interested. I'm more just interested in the levels and the price. DAX has bounced off the pivot. Big fan of the daily pivots here based on the standard pivot calculation. But I'd be interested in buying down here on the DAX today. During if the US session, we see an extension down into these lows. We've got this big support point down here that was close to the weekly low, but it is a significant low down here at 14,100. Also has a round number. And then we have this resistance point here at the top of this candle here at 82. So for me, that would be a buy zone. We also have sideways markets as well. Now, what do we want to do in sideways markets? We want to trade the extremes of those markets until the market decides to show us that it wants to break up. So, what's the market telling us? Every time the market's down in this sort of zone, it's fine buying appetite. Of course, that doesn't mean it's the case. It might go straight through, but that's the nature of trading. So for me on the DAX, I'm quite interested in that. That would be the same up here as well, this resistance zone. I'd be interested in selling up here. But, the market's some distance away from that. So that's not in my sort of immediate periphery for the next day or two, because unless we see something, the war ends or something like that, then we're not likely to see that. But then again, I probably wouldn't trade that anyway if it was that volatile and had that lack of technical ability. So for me on the DAX, in looking to get long down here from this 82 to 109, looking to get short here at this 80. Of course, what we might see is pressure on this low, in which case we might see a triangle wedge. And again, over these coming weeks, I'm going to go into more details about strategy and setups and show some recordings of previous trades. We might start wedging down here, where we end up with this triangle wedge to the downside, where the market looks like it ends up breaking down. Fibs aren't massively relevant. With 50% does have S3 weekly, that does jump out at me, but again, I'm not sure we'll see that this week unless we see some pretty negative news. So in summary on the DAX, interested looking getting long from 14,082, interested in getting short from above this 14,844 for the time being. Most likely trade would be down here at this 82,208, 108 should I say, if the market wants to come down there. Let me know if there's any specific markers people want to have a look at. The three moving averages I have are the 59, which is practically a 60, the 20, and the 10 exponential moving average. Now you do find that they work quite nicely on on the index markets as well, also the FX markets. I'm going to just pick a US market. I don't want to do all 3 US markets. The US markets are closed currently. These charts only have real market data on, so we will not see, won't see the price action moving now, if you're wondering why they're not moving. Because obviously, unlike the FX markets and crypto and things like that, the index markets do close more frequently. So again, we'll have a look at our long-term fib here. You can see we haven't quite touched the 61.8, but we're relatively close. We have 2 distinct zones here. We've got zone 1, where we have some sideways markets, and then we have zone 2 as well, where we have some sideways markets as well. So the NASDAQ will be interesting. I don't know where we're opening on the NASDAQ today, but if I could just come down, I mean, this is probably better on a 4-hour chart than a daily, but it still makes sense on a daily. Again, we have a relatively sideways range. We had this extremely strong rally. It's one of the strongest rallies we've had in months, just market making higher highs on a regular basis. And then we've hit this sort of block here up at 15,265. So the question is whether we're going to be able to hold this zone. I don't know where the out of hours price is at the moment on the NASDAQ, or whether we're going to be able to sort of put pressure and continue this trend as well. I'm interested in working from this level here, this 14,723. If the market wants to come down, I think I'd be interested in buying from down there, just on a basic double bottom. But just with us having these lower highs, so we've got the high here, lower high, we might start wedging back into this 14,723, in which case we'd be interested in looking for a break short. But it's tricky to get short on the NASDAQ, and psychologically I think it's tricky as well. And the reason for that is this, basically. Since the subprime mortgage crisis back in 2008, the NASDAQ has pretty much gone straight. Yes, we've had some pretty significant pullbacks, but when you consider what this was the pandemic, the DAX probably is equivalent to there, the FTSE is equivalent to there, but you can see here just how relentlessly bullish the NASDAQ has been because of people being locked down. Was obviously good for tech firms, Netflix, for example. So this is where money just got plowed into, and these valuations of some of these companies are absolutely enormous. So the problem with trying to short the NASDAQ over any sustained period is the fact that it just keeps pushing back up. Now, this is a large correction. This is by definition a correction. It's over 10%. So it would have been great shorting here, but it's a tricky one at the moment. So I still try and get long on the NASDAQ when I can rather than short. Now, just a quick note on stock markets. They are different from other markets like FX markets, because if you think about, if you own a company that's in, say, I don't know, whichever stock market, let's say the NASDAQ, for example, you're trying to make that, or should I say you run that company, obviously the shareholders own the company, you are wanting to make that company successful. How do you define success? It's profit, it's revenue, it's growth. So everyone who's in the NASDAQ is trying to make their company better, they're trying to make it more successful, they're trying to generate more profit. So this is why the stock markets go up more than they go down. So if you're going to have a bias for the stock markets, you generally want to have a long bias. And again, if we zoom out, we can see why that's the case. Go all the way back to the 80s, we had the dot-com boom, which obviously messed things up, and then tech really got going as the world's changed and become more technological to 2004, etc., Facebook and things like that, and it's just gone arrow straight. But even if you take something that's got even more history, let's take the Dow Jones here. If I go onto a yearly chart, I believe I've got a lot of data on the Dow. Let's have a look. Yeah, the Dow, I've got data from the Dow all the way back to 1928 in case you need some technical analysis between the 2 world wars. But you can see here, as obviously trading started to become more speculative, and we saw the boom in the 80s. You look how many positive years we have compared to negative years. We don't have, 3 negative years in a row was quite incredible on the back of the dot-com boom, but generally speaking, the stock markets go up and up and up and up. So trying to get short on a sustained basis becomes a bit of a tricky wick, shall we say. Let's move on to something a little bit different that I do trade. I do like to trade Bitcoin. And the reason I like trading Bitcoin, and my Bitcoin story is back in 2017 when it became a CFD. I started trading it with my trading partner, and then the spreads just all went crazy. IG, for example, had a 120-point Bitcoin spread, and it became uneconomical to trade. I do have some coins, some unleveraged coins in Coinbase, like I guess a lot of you do. Do any of you guys got that? Anyone into crypto? I know a lot of people do like trading crypto. I generally stick with the main ones like Ethereum. Bitcoin. But the reason I've got back into it, day trading it, maybe just swing trading it over a few hours and days, is because Eightcap have the 12-point spread on Bitcoin. I mean, they've got 250 cryptos. I don't know what most of them are, I'm going to be perfectly honest with you, but the 12-point spread on Bitcoin makes it very much a tradable asset on a shorter term time frame. So that's why I've revisited Bitcoin on a more technical basis rather than just hodl, if I can say the oversaturated meme. So at the moment on Bitcoin, I'd say I've got quite a bit in a wallet, but this is what we're looking for from a technical basis here. We were long here last week. I think we did live trading session with that trading as well. We got long here, didn't hold it anywhere near enough in hindsight. But we have but what's interesting is sometimes even with these descending trend lines, you will see markets do this type of business here where you find that resistance become support. Quick question, does Bitcoin, do you find it's quite technical? Really good question. That ties into 2017 as well. I mean, when Bitcoin started getting really obviously volatile, I mean, again, that 2017 volatility looks like nothing, but when Bitcoin was basically just buy it, and even your hairdresser was asking you, or your barber was asking you about it when you knew it was time to get out. You know, we had no idea if it was technical. I remember discussing this with Michael, my trading partner. We had no idea if Bitcoin was going to be technical. It just, there was no history, there was not enough history of it, and the history was all just flat sideways nothingness. All the smart people had got into it in 2010, but now Bitcoin is showing itself to be very technical in terms, and very tradable. And much more reliable from a technical analysis point of view. It's proven itself to do so, and I guess as more people get into it, I guess now there's a futures market for Bitcoin. Now more people are interested in trading it as a CFD, etc. You know, it makes sense that it would become a more technical tool. So yeah, I do find Bitcoin quite technical. I find it quite interesting to trade, and it's something that we do look at. So what am I looking for on Bitcoin at the moment then? Well, at the moment, we're just interested. We did almost revisit that level today, to be fair. That could have been a bit of a double bottom, but it didn't quite come down there. So the question for me is today now forming a higher low where we can get long from? We're sort of setting up a pin bar for those who are interested in candlestick formations, which indicates a reversal. Let me just draw that fractionally more neat. There we go. Which indicates a bit of a reversal. So I'm interested to see what the candle does today, but equally, we have got lower highs here. So it's easy to make the case for one way and just ignore the other. But it does look, let me just try and neaten these charts up. I'm happy with that. Those two wedges, actually, I don't think that's too messy. So again, last time we saw the wedge pinched here, we broke out to the upside, a bit of a bull flag, if you like. I mean, this was a longer term wedge here, and we saw a breakout to the upside. The question is just whether we're going to do that with this wedge as well. We're going to break out to the upside. So that's what's interesting me. We have sort of a bit of a mini wedge here. I'm interested to see if we're going to break to the upside. Now, the question is, how would we enter that? Well, if you are super aggressive, you could get long and put your stop below this low down here on the 1st of April, anticipating a break to the upside. Or you might want to see possibly, I mean, it depends what the candle, I mean, there's still 14 hours of today's daily candle left, so there's a long time. But what you might want to see is whether we get a break of today's high. You know, if we continue to hold below that 517 for today, you might take an entry on the break of a new, and just gone small, you might take an entry on the break of this new candle here if it wants to break above this 45,517. I think that would be interesting for us on Bitcoin if we see a bit of a pin bar formation here. In that case, you'd pin your stop below your low, and then I guess you'd look to see if you can take profit towards these highs. And of course, if it wants to break those highs, then it'd be great as well. I generally enter 3 positions on MT4 and MT5 when I'm trading. We have an expert advisor tool. So if I'm risking 1% of my trading account, for example, I'll take 3 third positions, which will be done automatically for me. And that gives me flexibility of my profit targets. I like to scale out. So you know, if I get long, for example, on Bitcoin, I want profit 1 target there, and there. Maybe if I'm looking for a big move, then that's easy for me to do. So I do like to enter multiple positions within normal risk management rather than take 1 solid position. So just a quick tip there, if you've not considered scaling out, just have a consideration of that, have a look. But I'll be looking to see if we hold below this 45,517, and then I think I'll be interested in looking for a break for it tomorrow. So I'll probably revisit this in 24 hours time. Gold, very popular at the moment. We're finding a lot of our traders are trading gold. Gold is traditionally that asset that when there's risk and people are taking money out of the equities or stocks, it often goes into often goes into gold. Let's just have a longer term perspective here and just see where gold is at the moment. We nearly did that monster double top with the all-time high. How many disappointed traders were waiting for the market to come and actually test the 74.95? And it didn't. It just fell a fraction short. Sod's law with trading, but that's the way it goes sometimes. I mean, to be fair, if you're looking at a daily swing trade, you'd probably have a sell zone that encompassed a little bit less, a little bit lower than that. But for me, gold's just gone a little bit sideways, and it's lost a little bit of that momentum that's really sort of interested me to get involved with gold. We've gone into sideways markets again, and what are we saying about sideways markets? Well, I mean, we want to really sort of just fade the extremes. I mean, we went from, you know, this sort of sideways, and now we've collapsed into this sort of sideways range as well. So I think gold is tricky at the moment. I mean, buying and selling the extremes makes sense. I mean, if it comes up to 19.49, you might want to sell that. I mean, if it comes back down to this 916, you might want to buy that. Look at this very, 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 very subtle short squeeze here. The markets will do this time and time again, where you see how, I mean, I'm just going to really zoom into this wick, and I don't have the contract data here, but you can just see here how the market's just gone through the door. You often have to go through the door in order to see what's on the other side, and on the other side for anyone who's shorting is just pain, because in order for the market to go down here, people are having to sell below this level, and almost immediately they're getting short squeezed here. You know, we talk about, these are not beyond the scope of talking today, but we talk about how to take advantage of this type of price action when it comes to finessing entries. But you'll find this time and time again how the market will do those little naughty little fake outs there. And this is why when you're looking to take breakouts, you really want to see further tests of the level. You want to see wedging into the level rather than just taking a straight break. So for gold, if we push to the extreme down here, 80, 90, I'd be interested in buying. Look at that rate of rejection, the candle. We also have the monthly pivot at 966. So for me, selling up here, buying down here would be absolutely ideal. Just if you can, the session's still continuing, but I've just put in the chat there, we do have a Discord group where I do put in some live trade sessions that people can join. Also, it mentions our prop firm as well, so it's just different things that are all to do with us trading. We put analysis and commentary. It's a really good community, so I've put that in the chat. If you'd like to join our Discord, please do. It's obviously free, and you can just come and interact and see some of the members of our trading community who are posting charts and ideas, because trading can be quite a lonely pursuit, and that's one of the things that I think is important, is bringing like-minded people together, rather than just being sat at home in your office or whatever, trading on your own. I think it's important to be surrounded by a community. You can't really talk to other people about it, can you? In casual, they just think you're gambling. So it's a tricky one just to talk to people about. So I think that's important. Anyway, S&P 500, big level that might get tested today. Very popular futures market that gets traded. Down here at this 14,507, we're looking to get long there yesterday. The market didn't quite come down there. We also have the weekly pivot as well. That's interesting me. I'm going to get onto FX pairs very shortly after the S&P 500. Going to look at some of the major ones. But interesting down here at 4,507. We'd be definitely interested to see if the market comes down here. It's the buy zone for me between that and the S3 pivot. Oh, that's daily pivot, beg your pardon. That's going to disappear. That pivot's going to disappear once the market opens. So ignore me. I thought it was a weekly pivot for some reason. So yeah, down here at 4,507. I'm interested in looking to buy the S&P. Quite negative sentiment, and for this past trading week, we've only had one positive close, so just keep that in mind as well. We don't want to catch a falling knife. And we actually had long on the S&P that was actually successful. Let me just see if I can fire that up quickly. I'm going to give you an example of the way we do look to trade. I'll just get that cooking in the background, and then I'll place that on screen. But yeah, I mean, 4,507 is that level that I'm interested in buying on the S&P. And just get rid of that a second while my video recording. Part of our trading education is we do like to record our trades, because again, you can always say, oh, go long or short here once the moves happen, but we can't trade like that, can we? That's the deceptive simplicity of trading, is how much trickier it is. So this was an S&P trade took yesterday. This is on one of our funded accounts. in our trade room here. Let's see if I can remember it. Oh no, it was a short, beg your pardon, it was a short on the US 30. That makes sense. So anyway, I just want to emphasize the support becoming resistance thing that I've been speaking about. And I'm just going to bring your attention to the Dow Jones, which is here. This is a pre-recording from yesterday on an hourly time frame. I just want to emphasize the sort of lessons that I'm giving you here, or sort of way that I trade. So we've got support here, market comes up. I'm anticipating it's going to find resistance. If you notice, we also have the pivot as well. So that's the pattern that I'm anticipating is going to occur here. So just focus on that chart. It's obviously my trading charts here. Again, this is one of our funded accounts. Evaluations that I'm trading for to create educational material, which is why it will say demo on it, 'cause it's on that server. So we're looking here to the Dow. We're looking for the market to come and stall at this level. Then we're interested in selling. So this is going to put me in 3 positions with 50-point stops, 5,000 pips, which is 50, it's taken into account a decimal place. The market comes up, looks like it's hitting that pivot level, and then we get short on this market here. And this is what we're anticipating. We're anticipating this part of here to do this, and we're just looking for a quick 50 points off this, even on hourly time frame. 50 points can happen very, very quickly, and we can see here eventually the market starts rejecting it, starts coming down. You'll see here that once it's closer to its profit target, I'll move the stops to break even. Do that by just clicking stop to entry. This is a tool that we've developed that makes trading very, very easy. Yes, this tool is available. It is free if anyone wants it. And we're just going to move our stops to break even. Probably should have done it sooner, to be fair. I was probably daydreaming or something. As we get close to those profit target, and then it's just a case of seeing if we can hit those 50 points of profit, and then eventually it does. But that's just an example there of the type of pattern that I've been talking about today in action on an hourly time frame rather than a daily time frame. So just thought I'd just fire that one up. It's just sat there ready to be edited and put into some educational content. Right, let's have a look at some currency pairs then. To round off this session, aiming for a quick half an hour. I appreciate your time, and you are busy people, so I don't want to keep you here all day. So I was long on cable, but now it's made me a little bit sad. This is the pound-dollar currency pair. It's called cable because the transatlantic cable that goes from the UK to the US on the seabed. So I was interested in the break back above 1.31616, back above £1.31. And it did that, and we got long here, and it just lost its momentum, really. I think we got stopped out break even on that, but now I'm just not so sure. It's just struggling a bit in this sideways level. I was interested in it. It's just lost a little bit of fizz for me. So I don't think there's any immediate opportunity for me. I mean, it is probably looking bearish overall. I mean, if we just clear a lot of look at these lines and just try and keep this longer term perspective, I mean, these are going to be drawn very, very roughly. But we are sort of on a descending channel, aren't we, with cable at the moment? So it looks like, the sell might be the play, but it's just a case of where that'd be from. I think it's just gone a little bit sideways before it's interested in making its next move. I'm just not sure where it is. 1 minute I think it looks like it's going up, then it goes down, which is generally an indication that I should stay out the market. So I don't see anything on cable at the moment. Maybe it might come and fake out down here at £1.30 on the nose. Maybe it won't. We'll have to see. But while it's just chopping around this mid zone, I'm not massively bothered as to where it is. Euro dollar then, just to round us off, one of the most heavily traded currencies in the world. Please do let me know if there are any you want me to look at for next week, and I will have a look at things. Euro dollar, I find this a very difficult currency pair. Does anyone trade this? I'm not a huge fan. Never been a huge fan. Euro pound's even worse for me, but like I say, index markets are my thing, but I do look at FX as well, mainly cable. I think down here at 108 would be interesting for me to buy from. We've had 4 negative days in a row. Today's looking from that, but the strength of rejection down there would interest me to be a buy down here. What I would like to see, talking about the short squeezes and fake outs given advanced entry, is the market come down, break below the level. I mean, if it carries on going down, so be it, but what you can often find is the market will come down, get this short squeeze on where all the sellers get trapped in, and then it pops back up, and you can get long on the pop back up with a stop below the low. Very common price action pattern on Forex. It loves to fake out. I mean, for example, I don't want to just cherry pick because it's very easy to do with examples, but you can see here how it's done exactly the same thing. It's not quite done it here, but you see how the markets come up here. It's held above the level and then faked out. Potentially there was an entry there. It depends on the price action of the day. Obviously I'm looking at a daily time frame, so I don't know exactly, but that for me is euro dollar. So yeah, that is pretty much the analysis for this week. Just have a look at some of the levels that I'm interested in, the key markets. I will prepare some more pre-recorded trades next week, as well as we sort of delve more into the strategies and setups, as well as just doing analysis. I'd rather actually show you something that practically that's trade. So I will be introducing some more sort of strategy sections, as well as the analysis, and then just some of the pre-recorded trades that I've got from the previous week. I record all my trades for our sessions. If you have a look in the chat, there should be a chat box, Babs, saying I'm not familiar with this program for the webinar. Yeah, there should be a chat box that has a Discord. If not, if you go to fundedtradingplus.com, fundedtradingplus.com, have a look right at the bottom. Our Discord is there as well. We'd love to see you in there. I post charts and ideas, and I do a live session, also do some live trading sessions as well, but I believe you've already been sent a link for 14 days to come in our trade room as well to come and watch me trade, so it'd be great to have you there. I think I've answered the vast majority of the questions that have gone along. Unless there's any more questions or comments, everyone, I thank you for your attendance, and hopefully I will see you this time next week, where we look to build upon these sessions over the coming weeks. So I'm going to end it there. I hope you all trade safe, and I'm just going to go into the background and just leave this chart on, and hopefully I see you all in our Discord. So do trade safe, do take care, and I will speak to you all next week.